the ability to leverage, like you said, with minimum 10% down, and if you could structure the financing terms to where the property could cash flow from day one, everything kind of happens by itself. You're motivated to buy because it's a great investment. Sell and give the seller, typically their price or maybe a little bit more to kind of, help them motivate to do this type of setup. But if the seller doesn't need all the proceeds from the sale of this property and they got enough equity, this is a win-win.
Alrighty, folks, the Fed came out yesterday and said the economy is great. We currently are forecasting 3% GDP growth. Unemployment is okay, 4.2%. Inflation is still a problem, 2.6%. But hey, let's give you half a point. Stephen Dow, did that surprise you what the Fed did yesterday?
I don't know if it would surprise me because they tend to do one thing, and say another. So it was really eye-opening for sure. Because again, as you and I just kind of talked off camera, I mean, the percentage of when they cut it by 0.5%, it's like almost automatic, or I would say automatic, but it's been 100% the time that we fell into a recession right after. So, yeah, it's just it's interesting times to be alive for sure. But
yeah, so folks, what Stephen Dow is highlighting there is the Fed is only cut by 50 basis points to start a rate cutting cycle twice before yesterday. So this becomes the third time. And both other times we had a recession in the very near future. So I told my audience yesterday before the cut that if the Fed cuts by 50, they're scared. So they're scared. I don't know what they're scared of. Is it a banking crisis? Is it the economy? Is it unemployment? Is it the election?
Or could
is
it be
Trump?
Political? Right.
Is
That's
it
what
Trump?
I'm saying.
I don't know. I don't
know. We're sitting around the water cooler going, what if, is it this? Is it that? Is it, it's really anybody's guess, but still, it's just a little unnerving because, like you said, automatic, or at least 100% of the time we've gone to a recession. So,
yeah. Well, we're going to get into the details here, but before we get into a real life example, we've got to do that marketing thing so we don't get in trouble.
Thanks again, Mike. Although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel, that of my own. So let's get it going.
Yeah, man. So one of the things I want to highlight again is we are seeing the economy slow down as far as transactions go. We just posted a record low for this cycle, 3.86 million. And what I want people to realize, if you're an investor, that is either good or great news. Now, why do I say that? Because when transactions get this low, motivated sellers go up, and more importantly, creative financing becomes in vogue. You want to know when creative financing was in vogue? 1981, the birth of creative financing. We still did 2 million transactions when interest rates were 18, 19, and 20%. Most of those were some kind of creative financing where the seller had to take back a second, where there was some kind of wraps or whatever. And I want people to realize that Velocity Mortgage and Stephen Dow bring the most flexible option to the table in your 90% CLTV. I often call it the 50-40-10. I call it the Swiss Army knife. Let's remind people what it is, and then I'll talk about why it is so powerful. So what the hell is this 90% CLTV 50-40-10?
Okay, so I mean, conceptually, it's just setting up your loan to where the setup of the 50% LTV first mortgage, the 40% where in this case the seller would be carrying a second, and the 10% down. So long story short, our particular loan allows for up to a maximum of 90% combined loan to value in any combination of my first mortgage and what the seller is willing to carry, up to a maximum of 90% combined. So ideally at 50-40-10 is where I would be able to give you my lowest rates. But I mean, it could be in any combination. We've done 70-20-10. I've done a 42-48-10. You know what I mean? So it's just a weird setup. And specifically speaking, I'm working on a particular potential deal now for a one rental at a time, long time channel watcher. And the dollar amount in which this particular seller was willing to take and then finance 100% of the rest of it, it worked out to where it's a 29% LTV first. Seller would be carrying like a 61% second, and buyers putting down 10%. And so when he started crunching the numbers, it was like it's going to cash flow based upon that, just for the fact that we just dropped rates as well on 1 to 4 unit non-owner residential. So it was just great timing. So that just made it to where the numbers kind of work. So
Yeah, the
Yep.
50-40-10 is so powerful because again, it's slowing down. There's transactions, there's people that want out. Again, I want people to realize this works for rental homes, fourplexes, also apartments. I think there's a lot of landlords that want to be done with this. A lot of landlords want to be out in 2024 for tax season. And again, if you have let me just play an example. Let's say you're working on a $2 million deal and the seller is entertaining seller financing. Let's just say in this example, they want 25% down and thus they're going to carry $1.5 million in this example, 2 million bucks, 25% down. They might entertain that. But what if you said, you know what, Mr. Seller, 2 million bucks. What if you walked away from the closing table with $1.1 million in cash? And all you had to do was then carry a much smaller note instead of 1.5. All you would
Right.
have to carry is 800K.
Right.
So in this case, Velocity comes in for $1 million. The
Yep.
seller's on the hook for a second at 800. And then
Right.
you, the buyer, are putting in only 10%. You are getting a high leverage loan,
Right.
90% on a $2 million property. Now, the power of this is the seller gets a big lump of cash.
Hmm.
You, the buyer, should absolutely work tirelessly to make sure that 800K second is at a low, low, low interest rate. Because
Hmm.
essentially you're giving the seller his price, but you want your terms. So you
Right.
should be doing the math on something called the blended interest rate. The rate of the first, the rate of the second equals
Yep.
some smaller number. And it's just a great way to get 90% leverage, make the seller happy with the big walkaway money, and you're
Hmm.
happy because you have cash flow day one. What's not to like?
Right. I mean, you put it in a nutshell, to be honest with you. I think some people might understand it differently. So if they need to have a meaningful conversation, I kind of break it down in different, maybe layman's terms. But I think you pretty much put it in as simple as possible because, yeah, the ability to leverage, like you said, with minimum 10% down, and if you could structure the financing terms to where the property could cash flow from day one, everything kind of happens by itself. You're motivated to buy because it's a great investment, sell and give the seller, typically their price or maybe a little bit more to kind of, help them motivate to do this type of setup. But if the seller doesn't need all the proceeds from the sale of this property and they got enough equity, this is a win-win. So
Yeah.
um
Again, folks,
I agree.
please hear me. We are in a buyer's market. This buyer's market will not last until the spring selling season.
Right.
We have some events in our near future, an election, the end of the calendar year. There are sellers who want out, who need to be out, who want to be out this year for tax reasons. And it is your job to use creative financing to get it done. In one case, the seller's on the hook for $1.5 million, gets $500,000 at closing. In the other example, they get 1.1 million and only are on the hook for 800K. Being able to articulate that message is powerful. And what I would do with all creative financing is I would give them two offers. I would say, hey, Mr. Seller, if you carry everything, I can do this. But if you want some more cash, which a lot of sellers do, I could do this. And then have a discussion. What do you think?
Well, I mean, obviously, if we could potentially give them as many options as possible, hopefully one of them is, the best fit, given the circumstance or strategy. So yeah, if we got to plug away and kind of figure out different angles, I'm here to kind of, be a sounding
Yeah.
board. But a lot of cases, yeah, I mean, especially for a setup like this, it's going to take several phone calls, several emails,
Yeah.
stuff like that to really,
Conversations. Yeah.
yes, to
Yeah.
really know what we're working with. And then from there, once they got all the data, they can have a much more meaningful conversation with the seller or decision maker to then get the point across so that they understand the whole big picture. Because there's a lot of moving parts to this thing, unless
Yeah.
you fully grasp it, you can kind of get lost in it or assume the wrong thing.
Yeah. So the 50-40-10 is that Swiss Army knife. It is the best tool to get, best way to get high leverage, low rate or lower rate deals with the blended interest rate. Somebody's going to want to reach out to you, ask questions, talk about this. Stephen, how do they do that?
Email is always going to be the best. That's going to be to SDAO at velocity, the word mortgage spelled out, .com. In the subject line, please put the acronym ORAAT. That'll help get past the firewall. The body of the email, maybe a brief description of what you're looking for. address would be super helpful. At least maybe city and state to make sure I lend there. And then maybe your mid FICO score and best phone number to reach you at. And typically 24, 40 hours, I'll be in touch.
Appreciate you, man. There's going to be a lot of people that use the 50-40-10. My hope is people are buying apartment buildings and fourplexes and really using this buyer's market
Mhm.
to get amazing deals. And you're going to be a part of it. Thank you, buddy.
Thank you. Appreciate you, man.